bank reconciliation statement. Bank reconciliation statement. To reconcile simply means that there are some differences here and there, but now we iron out those differences so that they don't exist anymore. So in this particular topic, our concern is in the bank transactions, and also now in the cash book, we are going to have the bank columns. So actually, this is the scenario. We have got the cash book, and in the cash book, our interest is only on the bank columns. Remember how we used to prepare the cash book? We have the receipt side, which we call the debit. We have the credit side, which records the payments. Our interest is only on the bank of the payment side and the bank on the receipt side. These are the two columns we are interested, only the bank columns. We are not interested with the cash. We are not interested with the discounts. Our focus is only on the bank. When we make any transaction related with the checks, those checks are not money. The checks will have to be deposited to the bank. So at the end of the period, we might go ahead and request for a document we call bank statement. The cash book, this one is maintained by the business accountant. It is the accountant who maintains the cash book. Then the bank will prepare a document we call the bank statement, which has got the column for the date, the details, the DR, the CR, and the balance. That is how our bank statement will look like. That is how our bank statement will look like. So the funny thing is this. For the cash book, the debit will record the receipt, money coming in. Any check we receive, in the cash book, we are going to debit it here. In the cash book, we are going to debit it. But remember, the moment we receive that check, we shall have to take that check to the bank so that now money can be transferred from the account of the customer who is paying us to our business account. So when we take it to the bank, our bank is supposed to be credited. So the credit here, this column records the receipt. So when we receive it, we debit. We debit the cash book, we credit, it shall be credited in the bank. When that check will be taken to the bank and it is actually cleared by the bank, that money will be credited in our account. But in the cash book, that money will be debited. If we issue any check to our suppliers or any other creditor, we shall record it as a payment. That check will come here and it will be recorded. Let me put figures here. Like for example, here we received a check from John, who was our customer, and it was, I want us to do it like a real cash book, Huh? Maybe it was an ongoing business. We start with the balance brought down. The opening balance in the bank, maybe it was 75,000. Just but an example. Here in the bank statement, it is going to be maybe 1st of January. The balance brought down, it is 75,000. This is when we are starting the month. The balance that is in the bank is equivalent to the balance that is in the cash book. That is at the beginning of the period. Then, in the course of the month, we received a check from John. The check was 5,000. We shall actually debit the bank column of the cash book. But when we come here, maybe it was on 3rd of January, we shall record here John, there's a check from John, But this 5,000 now, it will not be debited. It will be credited here as 5,000. And then the balance here now is 80,000. Because crediting means that money has been received. 5,000 plus the balance gives us the 80,000. On another date, we received another check from Fatuma of 2,000. It was maybe on 5th. We shall come here and say 5th of January. There is a check that was deposited in our account for Fatuma. Again, we credit 2,000. So our balance will go up by 2,000 to 82,000. 82,000 like that. On another date, maybe we paid ABC Limited. We paid ABC Limited 10,000 by check. In the cash book, we record it as a payment. But when it goes to the bank statement, it is going to be debited. In the bank statement, a debit will record payments. In the bank statement, it is the opposite. So we shall come here, maybe it is on 9th of January. This check was paid to ABC Limited. It is going to be debited here 10,000. And then in the balance now, it is going to appear as 72,000. 82 minus 10, because it is a payment like that. So this is how scenarios or the cases normally happen between the cash book and the bank. When you receive it, you debit it here. But when you take that check to the bank, it is going to be credited. Money that is received in your account is normally credited, but in the cash book, we debit. Anything that we pay in the cash book, we record it from the credit side, but on the bank statement is going to be debited. So from the onset, I want you to note this. Debiting in the cash book is equivalent to crediting in the bank statement. Let me confirm if there is anything that is the board is not clear. Let me switch off the right part.
It's clear.
It's clear now? Okay, thank you. That is now our discussion today. Note in the cash book, debit is received, but in the bank statement, what is received is normally credited. That is our starting point. But now, what is a bank reconciliation statement? What is a bank reconciliation statement? A bank reconciliation statement, it is a statement that is normally prepared by the accountant in the business to try and explain why the cash book balance and the bank statement balance are not in agreement. If everything is okay, 100% okay, then anything that we have received in the bank columns of the cash book should also appear in the bank statement. And anything or everything that is in the bank statement should also appear in the cash book. That is ideally if everything is perfect. And when everything that is in the bank statement it is in the cash book, and everything that is in the cash book is in the bank statement, it simply means that the cash balance or the cash book balance that we shall obtain in our cash book and the bank statement balance at the end of that period, it should be the same amount. It should be the same amount. The cash book and the bank statement balances, they should agree. If everything is contained in each document, perfect. But ideally, that is not normally the case. You will find that the accountant has prepared the cash book maybe for the month of January. At the end of the month of January, the accountant will go and request the bank to print the bank statement for January, and then comparison will be made. The moment the comparison has been made, it is going to be identified that either the cash book balance is more than the bank statement or the bank statement is more than the cash book. The moment these figures are not the same, the accountant is forced to do a bank reconciliation statement, a statement that will explain why the cash book balance and the bank statement balance differ. It is going to explain that. But note, everything that we receive here should also be received on the credit of the bank statement. Everything that we pay in the cash book should also be paid in the bank statement. So when that one happens and it happens accurately, then our cash book and the bank statement balances will be the same, and there will be no need for doing reconciliation. Reconciliation only comes when the cash book balance and the bank statement balance, they are differing. They are not the same. We need now to do an investigation. Why is the cash book bank column balance different from the bank statement balance, yet they are supposed to be the same? We investigate and we find out the reasons as to why. So that is the starting point. Why do we prepare the bank statement, bank reconciliation statement? To explain why the two documents are having different balances. But note, the cash book is maintained by the accountant in the business. This one is maintained by another party, the bank, in the bank. Those parties are not there, or they are not together when they are preparing this. We receive a check. Once we have received it, we take it to the bank. Then the bank also records it in the bank statement. We pay somebody a check, that person should take it to the bank so that the bank can consider that as a payment from our account. And that is actually our starting point. Any question up to that point? I understand when we were doing the ledgers, somebody used to ask me, I know the bank is normally credited when I receive money. That is now the scenario. Yes, it is credited in the bank, but in the cash book, if it is money in, we debit. We debit. If everybody is contented by that, then I can go to the next step. The next step is to explain what makes the cash book and the bank statement balances differ. Reasons why the cash book and the bank statements differ. The cash book and the bank statement will differ because of two broad reasons. Two broad reasons. Number one, because of items in the cash book but missing in the bank statement. You will agree with me. If these two documents were to agree, one of the reasons why they will not agree is because, one, some of the items we can find them recorded in the cash book, but when you try to trace them in the bank statement, they are not appearing anywhere. When they don't appear in the bank statement, but they are in cash book, those are now the items of category 1. And those are normally 3 items that are in the cash book, but missing in the bank statement. They are normally 3. Number 1, we have got items we call uncredited checks. Uncredited checks. Uncredited checks, they are checks. Checks received and deposited in the bank, but the bank has not cleared but the bank has not cleared them. The checks that we received, the key word there is that the checks received. The checks received. We received those checks, then we took them to the bank. Probably, when the month is approaching the end, maybe it is like date 30th. When you take those checks to the bank, they might not clear the same day. Maybe they will clear after 2 days. So if it was the last days of January, probably those checks are going to clear maybe on the early days of February. So if I go to the bank after January and I request for the bank statement of January only, these checks might not appear in the bank statement of January, because by the time the month was coming to an end, they had not been cleared, so they did not reflect in the bank statement of January, but they are going to reflect in the bank statement of February. So the cash book is for January, but the bank statement for January, they are not appearing. So when I compare the cash book of January and the bank statement of January, you will find that they are in the cash book, but they are not in the bank statement of January. They are in the next month bank statement. Those checks that we have received and recorded in the cash book as received, but in the bank statement, they have not been credited, because anything we receive in the bank is normally credited in our account. They are not in the credit column of the bank statement. That's why they are known as uncredited. They have not been credited by the bank. So they are going to be known as uncredited checks. And you will agree with me, if we have received it we have received them in the cash book, but they have not been received in the bank statement, obviously the cash book and the bank statement balance will not be the same, because in the cash book we have received more than what was received in the bank statement. Point to note here, and credited checks, they have already been received. They have already been debited in the cash book. So they will be appearing in the debit side of the cash book, but when we try to trace them on the credit column of the bank statement, they will not be there. They will not be there. They will cause the difference in the cash book and the bank statement. Number 2, there are checks we call unpresented checks. The unpresented checks. These are checks paid or issued to suppliers or creditors, but they have not presented them for payment. They have not presented them for payment to the bank. They are checks that we paid our suppliers. And the moment I write a check to you, I record them in the cash book. I've said that on this and this date, I've paid Aris a check of 10,000. I record it in the cash book. On another date, I record I've paid Caroline by check 5,000. In the cash book, I have updated my cash book. But if I give you the check and you don't present it to the bank for payment, the bank will not know that I've paid you. So the bank will only be aware of that payment when you present that check to them, so that now money can be deducted from my account, so that my account can be debited and yours to be credited. So if I give you a check, I write it in the cash book as paid, and you don't present it for payment in the bank, that check will not be debited in my bank statement, and therefore those checks are going to be referred as unpresented checks. They are going to cause the difference. In our cash book, we have paid out the money, but in the bank statement, that money has not been paid out. So the cash book and the bank statement balances will automatically differ. So unpresented checks and credited checks. Lastly, we have got errors in the cash book. Errors in the cash book. What are these errors in the cash book? In the process of preparing our cash book, we can commit some errors. Maybe it was a transaction which I was supposed to record as a payment on the credit side. I made a mistake and recorded it on the receipt side. That is a mistake. And vice versa. A receipt, I record it as a payment in the cash book. The other mistakes is the mistakes of undercast and overcast. I was supposed to receive 100,000, but I have only received 10,000. Or the opposite way, I was supposed to receive 10,000, I have received 100,000. The overcast and the undercast. Those errors are also going to make our cash book and the bank statement balances to differ. They are going also to make the cash book and the bank statements to differ. So these three items, they are normally appearing in the cash book, but they are not in the bank statement. Of importance to note these two. Remember the description we have given them here. They are in the cash book. In the cash book, they are already there. They are only missing the bank statement. So, very important to note. Unpresented and uncredited checks, already they are in the cash book. They are only missing the bank statement. I'm insisting on that point because when this question comes in an examination, you will be asked to do two things. Number one, you update the cash book. Number two, you prepare a bank reconciliation statement. The moment you have an understanding that uncredited checks and unpresented checks, already they are in the cash book. They are only missing in the bank statement. You cannot use them to update the cash book. Remember, updating the cash book simply means you include the items that are missing there. You cannot use the unpresented and uncredited checks to update the cash book because they are already in the cash book. So when you are updating, never make a mistake of using unpresented checks and uncredited checks to update your cash book, because you will be doing that twice. They were placed there initially, and you are now doing it the second time, which is wrong. Uncredited and unpresented checks, they are only used in preparing bank reconciliation statement. They are never used in updating the cash book. They are never used in updating the cash book. Reason being, they are in the cash book already. They are missing in the bank statement. So we use them in reconciliation. These errors in the cash book, we will use them in updating the cash book. We will use them because they occurred in the cash book. So we must make the necessary adjustment so our cash book can have the correct balance. When they occurred, it simply means that the cash book balance is wrong. So we need to correct them so that our cash book can read the correct balance. Hope up to that point, everything is okay, or everybody is okay. If you are not okay, you are free to ask any question at any point. Ask any question at any point. Number two, items in the bank statement but missing in the cash book. Items in the bank statement but missing in the cash book. It is now the opposite. When you compare your cash book and your bank statement, you might also find that some items are in the bank statement, but in the cash book, they are not there. The cash book was maintained by the accountant. So this accountant, after requesting for the bank statement, the accountant will realize that either there is a payment the bank made, but we have not paid it in our cash book, or there is money that was received in the bank, but it has not been received in the cash book. So you need to do the adjustment. But what are these items that you find them in the bank statement, but they are missing in the cash book? Here we have items like the bank charges. The bank charges. Sometimes the bank will levy a certain amount of money as charges for maintaining our account or for certain transactions that happen in our bank account. Those bank charges, as they are going to be charged by the bank, the accountant will not be aware, so that he can also capture them as a payment in the cash book. So they will be missing. Number two, we have got what we call the standing order. Standing order. Standing order. It is actually a request that is normally made by the account holder to the bank to be paying a certain constant expense amount on behalf of the account holder. If, for example, you have got a savings plan whereby you normally save 5,000 per month, it can be in form of insurance premiums or something like that. Each and every month, you are supposed to deposit that 5,000 in the savings account. Instead of you presenting yourself to the bank every month, and this is a savings plan maybe for 10 years, you can place a standing order to the bank whereby the bank will be deducting the money from your account and transfer to the savings account, and without actually yourself appearing there. But it must be a written request for that to be implemented. So when the bank will be honoring this standing order, the accountant normally forgets to do the same. Maybe it is every 5th day of the month, the bank will deduct, but the accountant, maybe he or she has forgotten about that. He will not also deduct it as a payment in the cash book. So you'll find that it is going to be a deduction only in the bank statement. Then we also have things like the dividend. Dividends. And by dividends here, we mean the bank, the business can have maybe an investment plan whereby we normally receive dividends annually. And those dividends maybe are deposited directly into our bank account. So when they are deposited, or when they are declared and deposited by that particular investment company, we are not aware that they have paid. So they will be received in the bank, but in the cash book, they will be missing because the accountant was not aware of that kind of a receipt. Then we also have what we call direct deposit. Direct deposit will occur in cases where I owe you a certain amount of money. But at the same time, I have your bank details. I have your account number. I have your account name. So instead of paying you by cash, I just go, I deposit that money in your bank account, and I don't tell you that I have done that deposit. So you might think that I have not paid you, but when you request for a bank statement, that is when you realize that, oh, Macquarie had paid us on this and this date without your knowledge. So it was money that was deposited in the business account by a customer without the knowledge of the accountant. So it is going to be in the bank, but it is not in the cash. We also have what we call dishonored checks. Dishonored checks. A check is considered dishonored when the bank has rejected it. The moment the bank rejects the check, we normally call it a dishonored check because of various reasons. Maybe the account has insufficient funds, maybe the check is stale, the check is not legible, among many other reasons. But to your end, the moment the bank has rejected or has returned a check, just know that that check is dishonored. Don't bother with the reason why it was returned. Just know it is dishonored. So a dishonored check, it is the check that we had initially received. And it actually in the cash book, it is recorded as received. Remember, it has been rejected, meaning that we had received it, then we took it to the bank. The moment we received it, we recorded in the cash book as received on the debit side. But when we take it to the bank has rejected it. So it is dishonored. So in the cash book, it stands as received. So the responsibility that we have here is to cancel it from the cash book. because it is received, but in the bank, it has not been received. It has been rejected. So what do? If it was received in the cash book, we dishonor it also in the cash book by crediting the cash book. So it is also going to be an item. It is actually in the bank statement only because it has been dishonored there, but in the cash book, it has not been dishonored. So the responsibility we have is to go back.
Mwalimu, we lost you for a moment, so you may need to repeat. I think you went off.
Okay, maybe it is as a result of a fluctuation in the internet, but I was talking about the dishonored check, which is a check that has been rejected by the bank. But at the back of your mind, anytime a check is dishonored, you need to remember it was first of all received. Because a dishonored check is a check that we have deposited, but the bank has rejected. So when we received it, before taking it to the bank, it was recorded in the cash book as received. When I say that it was recorded in the cash book as received, I simply mean that it was debited in the cash book. When we take it to the bank and it is rejected or it is dishonored, then we need to go back to our cash book and also dishonor it there. We cancel it. We cancel it because it is indicating as money received in the cash book. But that money has not actually been received because the check has been returned. So because it was debited, now we shall dishonor it from the cash book by crediting the cash book, by removing it there. Remember how we used to do the errors. If a figure has been debited and you want to cancel it, you will cancel by crediting. So a dishonored check will be credited in the cash book so that we can cancel the initial debit that was made there when it was received. And lastly, number 6, items that are going to be in the bank statement but missing in the cash book are the errors in the bank. Errors in the bank. Errors. You know, even those who are doing these transactions in the bank are human beings. They can do some errors. They can do some errors. They can either increase our bank balance or reduce our bank balance. So these errors, either they increase bank balance, or they decrease our bank balance. Those two errors, or the errors that the bank might commit. If they might commit an error that will make our balance to go higher or go down than the accurate or actual value. So that is what we can talk about. All this from number 1 to number 5. Bank charges, standing order, dividends, direct deposit, dishonored check, and anything that is in the bank but missing in the cash book, we normally use them in doing updated cash book. We normally use this to do an updated cash book. Plus this also, plus errors in the cash book. They need to be used in adjusting the cash book. The unpresented, uncredited, and the errors in the bank are used in preparing a bank reconciliation statement. Up to that point, I want to summarize this introduction part by this. For the updated cash book, we normally use a simple T account. Updated. To update, it simply means that there is a balance that we initially got, but that balance is not accurate. We need to adjust it so that we can have an accurate cash book balance. So you will start with that balance that you are given, which we shall call balance float down. If it is debit balance, if it is a debit balance, you put it on the debit side. If it is a debit balance, it will appear on the debit side. If it is a credit balance, for credit balance, it is going to appear on the credit. For the credit balance, it's going to appear on the credit. And when it is on the credit, it is an overdraft. It is an overdraft. So they might tell you the cash book of Macquarie traders did not agree with the bank statement. The debit side of the cash book had a balance of this, while the bank statement had this. So you need to look at where the balance is. If it was a cash book debit balance, weka hapo your balance. If it was a credit balance, weka upande wa credit, and then you proceed. But if the question does not tell you whether the cash book had a debit balance or a credit balance, if the question is silent, put it on the debit side. If the question is silent, put it on the debit side. And then now you will come and consider these items here. Items. Bank charges, it is a payment in the bank, but it was not considered as a payment in the cash book. So in the cash book, payments are normally on this side. Payments are on the credit side. So the bank charges will be here. It was paid by the bank, or the bank deducted our balance. So it should also be deducted in the cash book by crediting. The same case appears or happens to the standing order. The standing order, we record it as a payment because this is money that was paid from our bank account. It should also be recorded as a payment in the cash book. So it is missing in the cash book. We are including it here so that we can have it paid in the bank and also paid in the cash book. Remember my opening statement. The cash book and the bank statement, they should be identical. Anything that we pay in the cash book should also be paid in the bank statement. Anything that we pay in the bank statement should also be paid in the cash book. So when we receive our bank statement and we find that some payments were made in the bank statement, but they were never paid in the cash book, we now record them as payments. Now we use them to update the cash book. We use them to update the cash book because they were supposed to be on the credit. It is only that we were not aware that they existed. Now that we have confirmed from the bank statement and we found that they were paid, we also paid them in the cash book. That is all about the updating of the cash book. We include what was supposed to be there, but was not included in our initial cash book. Then for dividends, this is money we are receiving. Remember, we are receiving dividends from our investment somewhere. So that is money in. When we receive this money in the bank, it should also be received in the cash book. We need to come here and record it as a receipt. Dividends, put them on the debit side because it is money in. They were received in the bank, we also receive them in the cash book. The same case for direct deposits. This is money that we received in our bank account from our customer without our knowledge. The customer went and deposited directly in our bank account. So we received that money, but we were not aware to receive it also in the cash book. Then the dishonored check, we say it is a check that was initially received, but the bank has rejected it. So we cancel it. It was initially received, it was debited. Now we cancel by crediting. Dishonored check. And then don't forget. Yes, I'm Ross again.
Just a quick question.
Yes.
With the dishonored checks, could they work in the opposite way where you are the one who gave out the check and then the check was not honored?
Rarely. But we tend to be, actually, we normally argue it on this basis. We are doing a genuine business because we are now the owner of the business. From our end, we are doing a genuine business. So even the checks that we are issuing out, they are checks that are genuine without any error, so they cannot bounce back. Unless the statement is so clear and it says that the check issued to a supplier was dishonored, which is very rare to happen. When they say that a check issued to a supplier was dishonored, then that one will come here. It is going to be cancelled. Remember, when we pay a supplier, we credit. So we credited the supplier took the check to the bank has rejected that check. Because we had recorded it as a payment, we shall reverse it by debiting. But very rare will that happen, unless the statement is so clear like that. But when they just say that a check of this was dishonored by the bank, just take it as a check that we received. Now the bank has rejected. Understood?
Understood.
Somebody saying whether the dishonored checks, they attract, yes, they attract some charges, but for the sake of these questions in an examination, you will not find those charges. You will not find those charges. They will just tell you that the check was dishonored, but they will not give you the charges that were charged on that. Yes. Is dishonored check the same as bounce check? Yes. Those checks that bounce, they are not honored by the bank. They are returned back. Once you have captured this, don't forget to incorporate any error that occurred in the bank. And the statement will be telling you the amount received as 11,000 or 13,000 was recorded in the cash book as that 1,000. That is an error in the cash book. As long as they mention the word cash book, or an amount of 15,000 was recorded, an amount of 15,000 paid so and so was recorded in the cash book as 51. Those errors, so long as they occurred in the cash book, we need to correct them. So here we shall have any undercast payment in the cash book. Any payment that we paid but we paid less, we put it there. And any overcast receipt. Remember, undercast payment we paid but we paid less. So we are doing a top up. We are adding. There's something I've not seen here. Let me respond to this chat. So I've said this, if we have got the charges in the dishonored check, in the examination scenario, these charges you will not be given in the question. You will not be given those charges in the question about the charges on dishonored checks. So they are not going to affect our calculations here. They are not going to affect our calculation here. But you will be given generally the bank charges. When you are given the bank charges, just treat them as payment in the cash book that was never recorded initially. Now we are recording. But those dishonored checks charges, the question will not specify them. The question will not specify them. So undercast payment, we paid somebody, but we paid less. So if we paid less by 5,000, your 5,000 happened. So you top up naira initial amount, ijai. Overcast receipt simply means that we received the excess. To cancel an excess payment in the debit, you credit. That one you can relate with what we used to do in the errors. If we have debited excess, to subtract the excess, you credit. Then on this side, we are going to have undercast receipt and overcast payment. Like that. Like that. Once you have incorporated all this, remember there was the initial balance brought down. This was the initial wrong balance. You add what was supposed to be added, you subtract what was supposed to be subtracted, you will get the correct balance for the cash book. You get the correct balance for the cash book, which we call balance as per the updated cash. Balance as per the updated cash. So remember, the cash book is an asset. We debit by what was supposed to be received, or what was received but was not received initially in the initial cash book. We receive them. We deduct what we paid through the bank but was never recorded in the cash book as paid. So this amount, you add what was not received, you less what was not paid, you will get now the accurate or exact cash book balance. You get now the exact or the correct cash book balance. Once you have got now the correct cash book balance, which will be our balance carried down, the balancing figure. If it is here, it simply means that the debit had more than the credit. The balance carried down. If it is here, it is the debit that had more and than the credit, so it is a positive balance. But if we have the payments more than the receipt, that one is going to be an overdraft, which is negative. Once you have done an updated cash book, your next assignment now will be you prepare a bank reconciliation statement. You prepare a bank reconciliation statement. We have got two formats that we normally use. Bank it is a statement, it is not an account. So we don't have a T account here. You just underline that title. Then you can start with this balance that you got here, or it was here, which we call balance as per updated cash book. Balance as per the updated cash book. We normally get it from here. It was our balancing figure here. The balance carried down in the updated cash book. Then you add unpresented checks. The ones that we talked about here. We did not use them here because they were already in the initial cash book. Now they are going to be used in the reconciliation statement. The other thing you can add here, it is the error that increased bank balance, but these are rare. We normally say here, if any.
Mr. Makori,
Yes.
could you kindly zoom in a bit? Zoom in the camera. It's not clear to me. Kindly.
No, let me try to push the camera closer to the box. Is it better that way?
Yes, thank you.
Error that increase the bank balance, if any. Remember, these are now the errors that were committed by the bank. The ones that we said they can either increase the bank balance or decrease the bank balance. The errors committed by the bank accountants. Those errors that increased our bank balance. Maybe we were supposed to be credited by 15,000. The accountant made an error and credited by 25,000. So that error of 10,000 that increased our bank balance, we shall add it here, which is very rare, but sometimes they appear. You add the three figures, you get that. Then you will come here and less uncredited checks. You also less error that reduce bank balance, if any. When you get this figure, you rest this and you rest this, you will get a certain figure here, which is now going to be the balance as per bank statement. The balance as per the bank statement. This figure, you compare with the figure that will be given in the question. because they will give you the cash book balance and the bank statement balance. You compare this figure that you got here and the figure that you are given in the question for the bank statement. If they are the same, then you can walk out comfortably knowing that you have reconciled. If the figure you get here is the same as the figure you get in the question, then reconciliation has taken place. Reconciliation has taken place. This is format 1. This is the first format. I want us to have a look at the format 2. Format 2 is the opposite of this. What we are adding, we shall be subtracting. And what we are subtracting, we shall be adding. But now we start with this last figure. We start with the balance as per the bank statement. You add uncredited, you add errors that reduce the bank balance. Then you less these two, get this. Let us see in writing. So format 2 for the bank reconciliation statement. You underline, don't draw a T account. That is now the starting point of passing this paper. Understand the format of each and every statement or account. For the statements, we don't do T account, we just underline. So here we shall start with the balance as per bank statement. When you start with the balance as per the bank statement, what you add is uncredited. Uncredited checks. You also add if there is error that reduce bank balance, if any. If any, you will get a figure here after adding the 3. Then now you less unpresented. Less unpresented checks. You also less error that increase bank balance, if any. After doing that, you will get balance as per updated cash book. The balance as per the updated cash book is the balance that the balance carried down in the updated cash book. You compare. If they are the same, you have done conciliation. You have done the reconciliation. So those are the formats. Once you have those formats with you, you can comfortably handle bank reconciliation statement question and earn your marks very simple way, in a very simple way. So that is it. Don't forget, always unpresented checks are the checks we paid the suppliers. The suppliers have not presented them. but they are already paid in the cash book. The uncredited checks, the checks that we received, deposited in the bank, but the bank has not cleared them. They have not reflected in the bank statement by the time we requested the bank statement. They had not been cleared to reflect. So once you have that understanding, then it is going to be a walk in the park. It is going to be like drinking water in an examination. I want you to open the document I shared with you on the bank reconciliation questions. We do 2 or 3 or more than that, then we are done. Then we are done with the topic. The topic does not have much. Hope you have your document with you. Don't know. Anyway, I hope you have written the formats down to use this part. The question number 1, which says that on 30th April 2019, the cash book bank column of ZWorks Traders had a credit balance. The cash book had a credit balance. Credit balance for the cash book, that is an overdraft. For the cash book, credit is an overdraft. But for the bank statement, credit means that we have money. Because credit is a payment in the cash book. So when payments exceed the receipts, that is an overdraft. But now, of ZWorks Traders had a credit balance of that 1,000, while the bank statement had a credit balance of 34,600. Those figures are not the same, so there is a need to do investigations. On comparison, the following discrepancies were revealed. We are given the statements, and then at the bottom there, you are told to prepare updated cash book, a bank reconciliation statement. Always start with the updated cash book. Remember, always for the cash book, the debit is to record any receipts. For the credit, we record any payment. And that one is a T account. We use the simplified T account. So anything that was received in the bank but was never received in the cash book, we shall include it here. Anything that was paid in the bank statement but was not paid in the cash book, we shall record it on the credit side. That is how simple we do it. But never use unpresented and uncredited checks here. Higher. Let us go statement by statement, but always start with the balance. Always start with the balance. So on 30th April 2019, the cash book bank column of ZWorks Traders had a credit balance. That balance was credit, so you put it there as balance, note down. For the cash book, it was that 1,000. Now, let us include what was never received and what was never paid in the cash book. 1, some customers had made direct deposit into the bank amounting to 121,000. Those are direct deposits. Somebody deposited in the bank, you are not aware, receive it in the cash book. So you put it here as direct deposit, 121,000. it was missing on the debit side of the cash book. It was received in the bank, but was never received in the cash book. We now receive it. Roman 2, bank charges of 2450 was reflected on the bank statement only. They were in the bank statement, they were never here. They were never considered as, remember, bank charges is a payment. It is money deducted from our balance. So it is a payment. You now record it as a payment here as bank charges. Bank charges of 2450. Number 3, checks totaling 201,300 deposited by the firm had not been reflected in the okay. Checks totaling 201,300 deposited by the firm had not been reflected on the bank statement. Had not been reflected on the bank statement. What does that mean? What does that mean? The checks we received and we went and deposited them. Those are simply the uncredited checks. The uncredited checks. The checks that we have deposited in the bank, but the bank has not cleared them, they are uncredited. They are uncredited checks. And we know the rule. We should not use them in updating the cash book. They were, when we were finding this balance brought down, they were part of the transactions that were used to get this balance. So they cannot be used again. Number 4, interest received of 5,800 was reflected on the bank statement only. Interest received, so it was received in the bank, but it was not received in the cash book. That is what the statement simply means. Interest received 5,800 was reflected on the bank statement only. So in the bank statement, it is received. In the cash book, it is nowhere. We receive it as interest received of 5,800.
Excuse me, if I may ask.
Yes.
If we were considering the bank statement on the third point on the checks totaling 201,300, would we have considered it, or we're leaving it out because we are following the updated cash book?
Kindly come again.
I'm asking.
Yes.
On the third point on checks totaling 201,300.
Yes.
Since right now we are dealing with the updated cash book, if we were doing the vice versa, where we are now considering the bank, would we have considered that point of the 201?
If you are doing the vice versa?
The vice versa being the bank, yeah, on the bank side now, would we have considered it or would have left it as well?
There's something that I'm not getting clearly.
Okay, in my understanding, right?
Yes.
Yeah. Before you said we leave it out, in my understanding, before we got to that point,
Yes.
I was of the idea that this amount would have been credited. But now, considering that we are discussing about the updated cash book,
Yes,
does it
yes.
mean if we were now on the bank side, would we have considered this amount or will still have left it?
Okay, I have understood it up to a certain point. Let me respond.
Okay.
Then you tell me whether I have answered your question.
Okay.
So remember, these are the checks we received from our customers, and then we took them to the bank. So the moment we received them, we recorded them in the cash book before taking them to the bank. So when we took them to the bank, it must have been towards the end of the month. So by the time the month is ending and we request for the printout for that month, they have not been cleared by the bank. So these checks already they are in our cash book as received, but in the bank statement, they have not been captured. So what we normally use with them, or how we normally work with them, we don't use them in the updated cash book. We only use them in the reconciliation. We shall use them here.
Yeah, okay.
Yes.
Yeah.
They miss in the updated cash book, but they must appear in the reconciliation. Okay.
Right.
So go ahead.
If I may ask,
Yes.
These uncredited checks is
Yes.
the uncredited checks. Why are we not treating the interest received? Because it's also happening in the bank statement. Why are we bringing it to the cash book?
Okay. I can see there's some.
I'm saying, why are we not treating?
Yeah.
Why are we not treating the interest received like the uncredited checks?
Now, let me respond. You know, something that is uncredited, it is something that is not appearing in the bank statement on the credit column. Something that is uncredited, it is something that is missing on the credit column of the bank statement. Remember the format I gave you about the bank statement. It has the date, the details, the debit, the credit, and the balance. That column of the credit, that figure is not appearing there. Any figure that is in the cash book, but it is not on that credit column of the bank statement, it is what we call uncredited check. But this figure that is about the interest received, that is Roman 4. It says that interest received of 5,800 was reflected on the bank statement. So on the bank statement, it is there. It is reflected in the bank statement only. So in the bank statement, it is there. It is not uncredited. If it was not credited, it will not be appearing in the bank statement. So the statement guides us clearly. In the bank statement, it is there. So if it is in the bank statement only, you know, it is only supposed to appear in let me say two documents. It is supposed to appear in the bank statement and also appear in the cash book. If it is received, then in the cash book, it should be on the debit. That is where we record receipts. But in the payment, it should be on the credit. And the statement has said that it is appearing on the bank statement only. So in the bank, it is already appearing. So it is not uncredited. Uncredited, it is when it is missing in the bank statement. So if it is the bank statement only, so the assumption we make, which is actually a very correct assumption, it was now missing here. It was missing here. So it cannot be uncredited, yet it is in the bank statement. It can only be uncredited if it is not there. If you look at statement number 3, checks totaling to 1,300 posted by the firm had not been reflected in the bank statement. You see now the difference between those two statements? The third statement says they have not reflected in the bank statement, and if they were deposited, so it is supposed to be received in the bank. Anything we receive should be credited. So if it has not been received there, it has not been credited in the bank. That's why we call them uncredited. But the other one, number 4, they have been received in the bank statement only. So they are only missing in the cash book. So that's why we are using them in the cash book. Understood? Understood?
Yes, understood.
If it is understood, we can go ahead.
Yes.
A check of 14,350 from a customer was returned as unpaid by the bank. Don't look at the reason why it was returned. That is a dishonored check. Right here. And this figure is 14,350. 14,350. Last, checks amounting to 156,900 issued to suppliers had not been presented. So that one is very straightforward. They are unpresented checks. Those are unpresented checks. So they will not appear here. They will be used here in reconciliation. They will be used in reconciliation. So what we do after doing that, take your calculator, get now the balance carried down here. 121,000 plus 5,800. On this side, we have 126,800. The figures here, they are rest, so we are going to have a balancing figure. This is the balance as per the updated cash book. So there's a figure we must insert there so that we can have 126,800 here. So we shall take that figure minus, you add getting 112. $112,600. Somebody can confirm? If you take this 126,800 and you subtract those three figures that were on the credit. $112,600. 112,600. Let me do my bank reconciliation statement here.
Mwalimu, I'm not getting the same 112,600.
Yes.
I'm getting 79,000.
79.
Oh,
Me too, mwalimu, 79.
wacha basi mimi ndio nimekosea. 79,000 flat.
Yes.
Okay, sir. It must be an error, arithmetic error. Higher. Your 79,000 is the balance here, updated cash book. And remember, if you're hapa, it is a debit balance. I hope you now you can relate back on the ledgers. When this balance carried down is appearing on the credit, that balance is a debit balance, because it is the debit that had more than the credit total. So start with it here as balance as are updated. $79,000 is what we got. Balance as per the updated cash. Then you add. When you start with the balance as per the updated cash book, what you add is unpresented. What you add is the unpresented checks. That is appearing as Roman 6. Checks amounting to 156,900 issued to suppliers had not yet been presented for payment. 156,900. We don't have any error in the bank, so we just add these two. Plus 79,000. I'm getting
35,900.
yes, 235,900. So that figure now you will simply come here and you less uncredited. Uncredited checks. Roman 3. Checks deposited 201,300 had not yet been reflected in the bank statement. Any check we deposit, but it is not in the bank statement, it is uncredited for 1,300. For 1,300. If you less that amount from 235,900, the figure we will get here is the balance as per bank statement. Balance as per the bank statement. You will get that report. 600, which is a positive figure. So look at the balance that we were given in the question for the bank statement. On 30th April 2019, the cash book bank column of Ziwa Traders had a credit balance of 31,000, while the bank statement had a credit balance of 34,600, which is here, 34,600. When those figures are the same, you are through with your assignment. You have done the reconciliation perfectly. 34,600 in the bank statement, it is going to be on the credit because that is a positive figure. Eh? Because remember, we said any money that we receive, it is normally credited in the bank statement. Eh? So when the credit column of the bank is more than the debit, that figure is going to be a credit balance or a positive balance. So in the bank statement, a positive balance is a credit balance because any figure that we receive is credited. So zikifanana, you are through with your reconciliation. You are through with your reconciliation. So the balance for the bank statement, how it to me, you only wait and confirm whether the answer you will get is the same as that figure that you were given in the question. Haya, tufanye swali ya pili. 2 is always better than 1. Question number 2. On the 31st March 2018, the cash book bank column of Akisha Ventures had a debit balance of 335,100, while the bank statement had a credit balance of 122,450 on the same date. The statements are provided, then we are supposed to do an updated cash book. The CR for any missing payment, we put it there. The DR, any missing receipt, we capture it there. But always start with the balance for the cash book. The cash book bank column of Akisha Ventures had a debit balance. Put it on the debit as balance brought down 335. 335, 100. Upon comparison, the following discrepancies were revealed. Remember, I told you the bank statement balance, reveal it. It is going to be used for confirmation whether the reconciliation was successful. A check of 140,200 from a debtor had been dishonored by the bank. That is a dishonored check which you credit here. Dishonored check of 140,200. It was initially on the debit, now we are cancelling by crediting. Number 2, a dividend received of 2,400 had been reflected in the bank statement only. So we received the dividends and we actually received them in the bank, but in the cash book, we did not receive them. So you receive 2,400 like that on the receipt side or debit side. Number 3, a standing order payment of 15,000 had been made by the bank. They would always be missing here. So it is a payment not reflected in the cash book. Standing order 15,000. Roman 4, checks issued to suppliers amounting to 21,000 had not been presented. Note that, not yet been presented. They are unpresented. they will wait. We shall use them for reconciliation. They will wait. They will not appear here. They will wait for reconciliation statement. Number 4, checks issued to suppliers amount, Number 5, a commission of 550 had been charged by the bank for services rendered. Commission, it is charged, so it is a payment to the bank, but not yet here as a payment. So you write here commission charged. Commission charged 550. Lastly, checks received from Timothy and Jane of 7,300 and 10,000 respectively had not been credited, so they are uncredited. Still, we shall use them for reconciliation purpose. We shall use them for reconciliation purpose. So here we can now get our correct balance for the cash book. Correct balance for the cash book. Add the receipt, subtract the payments. 335, 100 plus 2,400. I'm getting 337, 500. Somebody is saying something or okay. Somebody is trying to say something, but the internet, like,
Mwalimu,
yes.
does it have always to be a debit balance? Always, ever?
Oh, no. Almost a debit balance. This opening.
Yes.
Oh, for this one that we have done here, it was on the credit. The question
No.
will guide you. Huh? The question,
Yes.
Yeah?
The question will give you, right?
Yes, it will tell you whether it is a debit balance or a credit. But if it is silent, if the question does not specify whether it was a debit balance or a credit balance, take it as a debit balance. Take it as a debit. But most questions, they will tell you the cash book had a debit balance of this or had a credit balance of this. So you put on the appropriate side. But if the question simply says that the cash book had a balance of this, while the bank statement had this, take them to be, or take that figure to be a debit balance.
Thank you.
Yes. So balance carried down 181,750. I'm being given that 181,750. So that it can be 337,500. You are through with updating the cash book. The only thing you avoid in the updated cash book: 1, unpresented checks; 2, uncredited checks; number 3, which is going to be very rare, it is the errors that occurred in the bank, the errors that were committed by the accountant in the bank. Those errors were in the bank, they are not in the cash book, so they don't affect our cash book. Okay, somebody is saying, how did we arrive at this amount? You take this total, you minus these figures, that is where you get that. It is a balancing figure. It is a balancing figure. Add these 3 figures, subtract from this. I hope you will get that. Higher. Bank reconciliation statement. Balance as per. Balance as per the updated cash book, it is that closing balance 181,750. Don't use this one again. Use the one that, yes.
Can I request you use the second method of reconciliation so that we can get both of them?
Okay, let me use the second format, no problem. Then I will start with the balance as per bank statement. You use the balance as per the bank statement yenye umepewa kwa swali. The bank statement had a credit balance of what? 122,450. Use that. Ukitumia balance as per the bank statement, what you add is uncredited checks. You add the uncredited checks. Those checks are appearing as a statement number 6. Statement number 6. Checks from Timothy and Jane. You can add the two figures. 10,000 and 7,300. It is going to be 8,300. Add that 7,300 plus 10,000. So it is going to be 122,450 plus 8,300, giving us 42,750. Then from that figure, you less unpresented. You rest the unpresented checks. They are under statement. Statement number 4, checks issued to suppliers amounting to 21,000 had not been presented to the bank for payment. 21,000, you less that 21,000 here. So if you rest, we get 181, which now will be balance as per updated cash book. 181,750, and that is the figure we got here. For our updated cash book, we got 181,750 as our balance. And that is the reconciliation. So you can either start with this to get this at the bottom, or you can start with the balance as per the bank statement so that you can find out whether you are going to arrive at the balance as per the updated cash book. So any can do. You are only supposed to do one reconciliation. So don't use this format and the other one format. If you use format 2, don't use format 1. If you use format 1, don't use format 2. Both are correct. Any can do. I want us, that is when you are given the statements. This check is not presented. This one is uncredited. This amount has not been captured as bank charges and all that. But there is another way you can be tested on this question. And that is when, instead of giving you the statements, they give you a summary of the cash book and a summary of the bank statement. They just give you, it's like they take a photo of the bank statement and a photo of the cash book, and then they give you both of them. You do the reconciliation. And that is actually what is appearing in that document as question number what?
Mwalimu, I'm a bit confused.
Yes, don't be confused. Tell me.
The unpresented checks, just help me understand the difference between the unpresented checks and the uncredited checks.
Okay, just think a case whereby you are the owner of the business. When you are the owner of the business, you will be receiving checks and you will be paying by checks, isn't it?
Correct.
The checks you receive from your customers, you will have to deposit them to the bank so that you can get your money. So when you take those checks that you received from your customers to the bank, and then by the time you are requesting for the printout of the bank statement, those checks have not reflected or that amount of money has not reflected in your account, those are the checks we call uncredited checks. The checks you received from your customers, you deposited to the bank, but the bank has not finalized the process of clearing them so that money can reflect in your bank account. Those checks are uncredited. But remember, they are already in your cash book. When you receive that check, you record it in the cash book before you take it to the bank. So in the cash book, they are already received, but that money has not been received in your account. So in simple terms, uncredited checks are checks received from the customers, recorded as received in the cash book, but the amount of money has not been received in your bank account. The unpresented checks is now the opposite. You pay your supplier by check. When you pay them by check, before you issue that check to that supplier, you will have to record it in your cash book. So it is recorded as paid. But now, the supplier, you don't have control over them. You cannot tell them, take this check by tomorrow. They will take that check to the bank when they feel like taking them to the bank. But now you see, when you go to the bank to get a printout of your bank statement, you might find that some of the checks that you paid to your suppliers, those suppliers have not presented those checks to the bank so that money can be deducted from your account and deposited in theirs. So the money in your account is not yet deducted, yet in your cash book, you have considered those checks as paid. So those checks that you have paid in your cash book, but the bank has not paid them, they are unpresented. Sawa sawa.
Nimeelewa, asante.
Keegan?
So every time I use the bank as the balance as per the bank statement. So
Yeah.
I will less the uncredited check.
These two formats, it depends with what you are starting with. If you start with the balance as per the bank statement, you add uncredited. You add uncredited. That is the trick. But for the other one here that we did, actually it is on that other end. This one, remember we started with balance as per the updated cash book. If you start with balance as per the updated cash book, you add unpresented. Add unpresented. Tuko pamoja hapo Keegan?
That's fair enough, Mwalimu.
That's okay. That's okay. So it depends with what you are starting. If you start with balance as per the updated cash book, add unpresented, less uncredited. But if you have decided to start with the balance as per the bank statement, add uncredited, less unpresented. That is the idea behind it. Kate?
Walimu, now in the question,
Yes.
you get the balance as at updated is 122,450, yeah?
Uh-huh.
If you use this formula, you get 181,750, which really confuses me because
You know, you prepared your updated cash book, senior.
yes.
And this is the balance you arrived at.
Yes.
Sorry, you're not able to see it. You prepared your updated cash book. Yeah. And this is the balance that you arrived at.
Yes.
This is the balance you should compare with what you get here.
So the 181 I compare with the one in the cash book, and the 124, because if I use the other method as balance as per the cash book,
Updated cash book. You don't use
yes.
use the one updated must be there.
I'm saying, Mwalimu,
Yes.
if I use the balance as per the updated cash book,
Yes.
I'll start with the 181 here, Sindio.
181, yes, 750.
Then I presented checks.
You'll add and presented the checks with this 1,000.
21,000. Then I get there, I will get 202,750, yes. Then I come here.
You rest there uncredited. The uncredited in this case
they were uncredited, they were 8,300. 300.
If you rest it from that,
then I'll get 124. I'll
You
get the
122
for 50.
for 50, which will be
Yes.
the balance as per the bank statement.
Yes. Yes.
Yeah.
Yes.
Yes.
I was asking,
Yes.
if I get the 181 is okay. If I get the 122 is okay.
Yes. Depending on the format. Those who start to use this format, if they get 181, 750, that's the answer bottom there, they are correct. Those who use this format and they get 122 for 50 at the end, but remember then this one should be written as balance as per the bank statement. They are also correct.
So Mwalimu, if I use the 81, I'll get 122. If I use 122, I'll get 181. See?
Yes.
Thank you.
That is very correct.
Sante.
And I hope nobody is getting confused. If you get 122 for 50, you call it balance as per the bank statement, which is the same as what we were given. If you start with 122 for 50 as the balance as per the bank statement, at the end you will get 181 and 50, which will be labeled as balance as per the updated cash book, which is also correct.
Thank you, Mwalimu.
Okay. Now, what about if you are given the extracts? What about if you are given the extract? You are not given the statements, but you are given the extracts. When you are given the extracts, the work is even easier. Look at the fourth question in your handout.
Mwalimu, by extracts, you mean extracts from the bank statement?
Yes, instead of giving you the statements, instead of the examiner giving you the statement like we have been doing the first two questions, they can give you an extract. They give you a sample cash book and a sample bank statement. Then they tell you the consign. The fourth question in your handout, it is testing the same concept I'm talking about. They have given you a sample cash book and a sample bank statement. Higher. That question about Mwanzo Enterprises have provided the cash book bank column only and the bank statement for the month of November 2017. So they have given you the cash book itself and the bank statement itself. So they did not tell you this one is missing here or there. And they are requiring you to do an updated cash book and a bank reconciliation statement. The concept remains the same. Updating the cash book, items that are in the bank statement but missing in the cash book are the ones we use. The other thing that you need to remember and remember very well, in the cash book, we debit receipts. But in the bank statement, we credit receipts. So when we are updating the cash book on the debit side, we need to confirm what is on the credit column of the bank statement, but missing on the debit of the cash book. Don't ever forget that. Debit in the cash book goes with the credit in the bank statement. Credit in the cash book goes with the debit in the bank statement. The payment in the cash book, we credit, but the payment in the bank statement, they debit. Don't ever forget that. Very important for you. Now, look at it. If we want to do an updated cash book, I want you to see how simple it is when you are given the extras. I want to update the debit, but always it is a norm. Start with the cash book balance. Start with the cash book balance. Don't update the cash book before you record the balance that was reported in the cash book. In that case, don't use the opening balance, but use the closing balance. If you look at the cash book, there is the figure that is on November 1, balance brought down. There is another figure for that first balance carried down of 288,900. we always use the closing balance at the end of the month, not at the beginning. We are adjusting the balance at the end. And actually, the reason why we are doing this reconciliation is because the closing balance of the cash book as balance carried down is 288,800. But if you go to the bank statement on the balance column, the last figure is 274,100. 274,100 is completely different from 288,900. Once they are not the same, reconciliation should be done. Reconciliation should be done. My point here is this: when you are capturing the balance of the cash book, you use that closing balance. That closing balance is the one that has issues. It is the one that we are updating. It is the one that we are adjusting, not the opening balance. Don't use 318,500. Use 288,900. The closing balance is the one that we are comparing with the closing balance for the bank statement. Now, how do we do it? Higher. Another thing that you need to remember here is this: when the balance carried down is on the credit, my friends, when the balance carried down is on the credit, that is not a credit balance, that is a debit balance. In simple terms, the debit had more. Remember, the carried down is normally inserted there to make the two sides balance. So it is appearing on the credit simply because the debit exceeded the credit. The debit exceeded the credit, and the balance belongs to the side that had more amount. So that 88,900, it is a debit balance. It is a debit balance. The debit is the one that had more than the credit by that amount. So put it here. Up to 88,900. Once it is there, we can now have other discussions. We are updating the cash book. I repeat my statement. When updating the cash book, use items that are in the bank but missing in the cash book. Here in the bank statement, missing in the cash book. And when you want to do an update on the debit, you compare with the credit of the bank statement. Whatever was received here, it is supposed to be credited in the bank. So can you go to the credit column of the bank down there, bank statement, the credit column? Which figure, which first figure is appearing there? Class?
Deposit from customer.
It is appearing as 18?
Direct deposit.
Yes, 18,000. So you need to see 18,000 is on the credit of the bank statement. Is it on the debit of the cash book that is given there? If you look at the debit of the cash book, do we have 18,000?
No.
It is not there. We need now to include it. We need to include it, and that is actually the direct deposit. It is missing. Anything that is missing, we include it. 18,000. We go back to our bank statement, still under the credit. After 18,000, the next figure that we have is what?
14 euro.
How much?
27,300.
27,300.
Is it on the debit of the cash book that we were provided with?
Yes.
Yes, it is there. So we don't have any issue with the euro. That check is appearing in both. We leave it. We go to the third item on the credit of the bank column. How much is the figure?
3,500.
3,500. Can we trace it on the debit of the cash book there?
No.
It is not there. And that one is for what? Dividends. They were received in the bank, but they have not been received in the cash book. We include them. The next item or the next figure that is on the credit of the bank statement.
See Onyango.
Onyango,
45,000.
45,000.
45,000.
Can we find it on the debit of the cash book up there?
Yes.
So that one, we don't need to do it. And actually, we are through with updating the debit side. Now we go and update the credit. We go and update the credit. When you are updating the credit of the cash book is normally compared with the debit of the bank statement. So we shall go to the debit of the bank statement. Are you there? Debit of the bank statement. We have got two figures. One of them is what?
HFARA.
HFARA, how much?
126,000.
126,000. Do we have it on the credit of the cash book that is given there?
Yes, we do.
Yes. So we don't include it. What about the next figure? 12,200 for bank charges. Do we have it on the credit of the cash book?
No.
No.
If it is not there now, we put it. It is supposed to be there. And the figure is 12,200. We are through with updating the cash book. We get the balance now. We add these figures to 88,900 plus 18,000 plus 3,500. I'm getting the return 400. So this side should also be 310,400, sorry. So the missing figure there is what we call the balance carried down. You take this total minus that. 298. 298,200. That is the balance at the updated cash book. This is the figure we use in the reconciliation. I hope everybody is up to that point. When you are updating the debit, compare with the credit of the bank statement. Anything that is on the credit of the bank statement not appearing here, insert it, include it. When you are updating the credit, go to the debit of the bank statement. Anything that is on the debit of the bank statement but missing on the credit of the cash book that you are provided with, include it here. Then you balance your cash book, and that is the end of it. Now, you can now agree with me. For you to do reconciliation, you must have unpresented and uncredited. You cannot do reconciliation without them. So you need to get the unpresented checks. You need to get the uncredited checks. Very important for reconciliation purpose. And how do we get them? From the definition that we gave them. They are in the cash book. They are missing the bank statement. They are in the cash book. They are missing in the bank statement. If I can start with the unpresented, I said, this is a check that we have paid the suppliers, but the suppliers have not presented them for payment. But the moment we issued this check to them, we recorded that check as a payment. So in the cash book, it is already recorded as a payment on the credit side, but it is not appearing on the debit of the bank statement where we record payments. Payments in the bank statement, they are supposed to be on the debit. Payments in the cash book, they are on the credit. So anything that we have paid in the cash book on the credit, but it has not been paid by the bank on the debit, it is unpresented. It is unpresented. So we go to the credit of the cash book. Identify, actually we have got two checks for H. Farah and F. Helen. Those are the two checks that we issue. Do we have one of them that is not on the debit of the bank statement?
Yes.
The one for Helen.
F. Helen is not on the debit of the bank statement, so it is not yet presented. By the time this bank statement was being printed, that check for F. Helen has not been received by the bank. So here it is that check for 15,100. It is still unpresented to the bank. sorted. We go now to the uncredited. Uncredited are the checks we received from our customers. We recorded that particular or those checks as received in the cash book, but they have not been cleared by the bank for that amount to appear on the credit column. That's why they are known as uncredited. You will not find them in the credit column of the bank statement, but they are on the debit of the cash book. So we go to the debit of the cash book. Leave around the opening balance, just focus on the three checks. Chinjoro, C. Anyango, Ejebet. Do we have any of those three checks which have not been credited in the bank statement? Which one is not credited?
Ejebet.
Ejebet. And that check is amounting to that 9,200.
200.
Once you have them now, your reconciliation is very possible and very easy. Bank reconciliation statement. Balance as per updated cash book. We got 298,200. 298,200. And unpresented. Unpresented checks. We have determined it was 15,100. Plus 15,100. Get 313, 300. Then you less. Uncredited checks. The one for Ejebet, 39,200. If you less that, you will get a figure which will be for balance as per bank statement. Balance as per bank statement. 313,300 minus 39,200. What do you get? 274,100. 274,100. You compare with the balance, the closing balance in the bank statement. Go to the balance column of the bank statement, the last figure down there. It is how much? 274,100. If that figure is the same as what you have here, then you have comfortably done the reconciliation and perfectly. That is the end. So when you are given the extract, you only need to know how to update and how to get there unpresented and uncredited. The format remains the same. How you update, get there unpresented and uncredited.
Excuse me, Mwalimu.
Yes, yes.
Kindly come up again on the, I need some clarity on how to identify unpresented and uncredited checks from the cash book, kindly. But I understand the other process.
So the process of getting these two.
Yes, please.
Yes, sir. You know, they are in the cash book. Unpresented and uncredited checks, they are already in the cash book. They are only missing in the bank statement. We discussed these items that are in the cash book missing in the bank statement, said unpresented and uncredited and errors in the cash book. Because they are already in the cash book, you will go to your cash book that you are provided with in the question. Unpresented, they are payments. They are checks paid. So they are on the credit of the cash book. Go to the credit of the cash book that you are provided in the question, the cash book extract. Look at all the payments that are there as you compare with the debit of the bank statement. So in this case, we went to the credit of the cash book. we had a check issued to H. Farah, check issued to F. Heron. Don't compare the balance. Don't compare the balance. Those were the checks that were paid. Checks that were paid in the bank statement, they are going to be on the debit. So we were asking ourselves, these checks for H. Farah and F. Heron, do we have any that is not on the debit of the bank statement? So we went to the bank statement on the debit column to find out whether there is one or both of them are missing. So we found that what we have there, it is 126,000 for H. Farah. The one for H. Heron, 15,100 was missing. So if it is already paid in the cash book, but not yet paid in the bank, then it is unpresented. So that is how we were able to identify this. It is already paid in the cash book, but not paid in the bank statement. For uncredited are the checks that we have already received them, and they are actually captured as received in the cash book, but they have not been, or the amount of money has not been received in our bank account. They are not received in the bank statement. So we went to the receipts of the cash book, which is on the debit. We received check from T. Njoro, C. Anyango, and A. Jebet. When we receive them and take them to the bank, they are supposed to be credited by the bank. So we proceeded to the credit column of the bank statement, and we found we had 18,000, which is not from anybody. We had 27,300 from T. Njoro. Also, we had from C. Anyango, 45,000. We are only focusing on the credit column of the bank statement. So C. Anyango, it is there. T. Njoro, it is there. But that check from A. Jebet, it is not on the credit of the bank statement, so it is uncredited. Are we together up to that point? Are we together up to that point?
Yes, very clear. Thank you.
Yes. Yes. Are we able now to solve the bank reconciliation question? Class?
Yes, Mwalimu.
Yes.
So in unison,
Yes,
we are good in it. These are some of the easy questions that you can find in an examination. I'm not saying that the others are hard, but they are faster. It is very fast. You can take like 5 minutes and you have done your reconciliation. You proceed to the next question. Maybe you have earned your 10 marks or 12 marks. Remember, in an examination, the focus is to get as many marks as possible. So you will score high if you have a good understanding of this question. They are highly tested, faster to compute, and also easy to understand. So I don't think you have any issue, but we shall have maybe an opportunity. I'm planning to do some revision questions, not with you, but I will be having some recordings on revision on the CHRP. I do the revision maybe on the bank reconciliation statement using the other approaches, and then I share with you together with the question that I have used to do the video, so that you can be following up as you do your revision. So when we meet next in our various classes, we shall be doing the control accounts. We shall be doing control accounts. Control accounts is another